All right, let's break down what Trump's permanent tariffs would actually mean. We're going to dive deep into the potential consequences, looking beyond the surface level promises and examining the real world impact on everyday Americans. This isn't just about abstract economic theories. It's about how these policies could affect your wallet, your job, and your future. For you and me, for the average American family trying to make ends meet, understanding the implications of these tariffs is crucial. We're talking about real money, real jobs, and real economic security. In early 2025, U.S. tariffs shot up from 2.5% to nearly 27%. This dramatic increase didn't happen overnight, but was the result of a series of policy decisions that culminated in a significant shift in the American trade landscape. This wasn't a minor adjustment, it was a seismic event in the world of international commerce. The highest since the Great Depression, a time of immense economic hardship and widespread suffering. To put it in perspective, we haven't seen tariff levels this high in nearly a century, a stark reminder of the potential for trade policies to drastically alter economic realities. That's not just a number, it represents a fundamental change in how the United States interacts with the global economy. And it has far-reaching consequences that extend beyond simple statistics. It's the biggest trade policy shock in modern history, a jolt to the system that reverberates through international markets and supply chains. The scale of this shift is unprecedented in recent times, and its effects are still unfolding. And it's hitting our wallets. The impact is immediate and tangible, affecting the prices we pay for everyday goods and services. On average, each U.S. household would pay over $1,100 more in taxes from tariffs this year, a significant burden for families already struggling with rising costs of living. This extra expense can strain household budgets, forcing difficult choices about spending and saving, and closer to $1,400 next. This upward trend suggests that the financial strain on American families will only intensify in the coming years, making it even harder to make ends meet. But that's not where it stops. The ripple effects of these tariffs extend far beyond direct tax increases. Since most tariffs get passed on as higher prices, businesses often have no choice but to increase prices to offset the cost of tariffs, ultimately passing the burden on to consumers. The real pain hits at the grocery store, where families are already feeling the pinch of inflation. Everyday essentials become more expensive, making it harder to put food on the table, the gas station, and anytime I buy something made overseas. From filling up your car to purchasing clothing or electronics, the cost of imported goods is directly affected by these tariffs. These tariffs are expected to cut the size of the U.S. economy by up to $180 billion a year, a significant drag on economic growth that could have long-term consequences. This reduction in GDP translates to fewer opportunities and less prosperity for everyone, shrinking everyone's purchasing power by around $3,800 per household. That's a substantial decrease in the amount of money families have available to spend on goods, services, and investments, impacting their overall quality of life. And if you work in manufacturing or agriculture, these sectors are particularly vulnerable to the negative effects of tariffs, as they rely heavily on international trade. The hit's even harder, with job losses becoming a real possibility as businesses struggle to compete in the global market. The threat of unemployment looms large for workers in these industries, and rising costs from countries hitting back with their own tariffs. This creates a vicious cycle of trade wars where everyone loses. Retaliatory measures can further disrupt supply chains and harm businesses on both sides. Big picture economists say tariffs will hurt GDP and wages, leading to a decline in overall economic prosperity and lower living standards for American workers. The consensus among experts is that these policies are detrimental to the economy, even more than a big corporate tax hike. This surprising conclusion highlights the significant negative impact that tariffs can have on the economy, even compared to other forms of taxation. All future households, mine, yours, our kids, end up worse off. The long-term consequences of these policies will be felt for generations to come, impacting the economic opportunities available to our children and grandchildren. Globally, things look rough too. The impact of these tariffs extends beyond the borders of the United States, affecting economies around the world. Canada and Mexico, who who rely on trade with the U.S. could face recessions. These key trading partners are particularly vulnerable to the disruption caused by American tariffs. Mexico alone could see its economy shrink by 16% if these tariffs stick. A devastating blow to the Mexican economy that would have far-reaching social and political consequences. Bottom line, while these tariffs might bring in over $2 trillion for the government, a seemingly large sum of money, the benefits are far outweighed by the costs. They're really just the largest tax hike since 1993, a hidden burden on American families disguised as a trade policy. This increase dwarfs any tax cut that may have been implemented, effectively negating any potential benefits. One that slows growth, raises prices, and leaves almost every American family paying more for less. A lose-lose situation for the vast majority of Americans. The promise of economic prosperity through tariffs simply doesn't hold up under scrutiny. So before anyone cheers at Liberation Day tariffs, it's important to consider the full picture and understand the potential consequences. It's worth asking, is this the kind of liberation we actually want? A liberation that comes at the cost of economic prosperity and financial security for American families? Is this really a step forward or a step back? Please like, comment, share, and subscribe to Ahead of the Curve 1776 for the latest news and assessments.